Hello and welcome to episode 41. This week we reveal who won the battle between First Solar and Nextracker Inc. We have a portfolio update and we battle two more stocks against each other with this week's theme of cybersecurity companies. Without further delay, let's get underway. Every week we invest £25 into each portfolio. One portfolio where you select the stocks, one that tracks the market, and one that generates income to pay to you. We'll then invest an extra £1 into each portfolio for every 100 subscribers we get. Last week we looked at solar companies and it was a very close run affair with 2 votes to 1. I'm also not so sure about this week's winner because Fishing in Puddles, great name update by the way, is not a fan of the winner. So question marks around that one, I want to hear more. But the votes have been cast, they can't be uncast. So this week's winner was First Solar.
3, 2, 1, go.
Last week was the first green week in a while and I was so happy to see the benchmark up 1.6%. Even the income generator was up 0.4%. But the best of the lot, the Battle Royale, up 4%. So pleased with that. This week, all in the green still. Income generator up 1.7%, benchmark up 1.3%, and the Battle Royale, the last of the lot, but I will still be so pleased with that, 0.9%. This week in the biggest movers in the portfolio, I'm not even going to mention Black Rifle Coffee, aside from that, of course, but I was very pleased to see some big numbers in the green, some not so big numbers in the red, surprising fall from Spotify, but otherwise pleased with those movements. Taking a quick canter through all of our holdings, we're looking at the total return and on the beach, unsurpassed so far with a 95% increase. Tesla 45%. Interesting to see whether the robo-taxi release finally changes that at all. Spotify, although down 6% on the week, is still up 50% and one of our best performers. Tristel, again, just to mention, doing very well for us. That was a great new addition. Google/Alphabet up 20%. These are all the fun ones to look at. A lot of green, a lot of double figures. However, as we get further down, we get some red double figures. And I just wanted to highlight Expedia Group, 11%. Manpower, I'll still take that after the way it fell. You can see up there, up 9% on the week. That fell dramatically immediately after we bought it. So pleased with how that's recovering. Same thing with Dick's, actually, Dick's Sporting Goods. And then a few that we're not so confident about, perhaps. Reddit, Tate & Lyle, B&M, Black Rifle Coffee, some substantial fallers there. All in all, that leaves us with 39 holdings, 21 doing well for us, 18 not so well. Our income generator is now paying us £31.05. That's up from £30.26 last week. We've just received our dividend, so exciting. £11.04 is in our account, held in cash. So we're going to add that to what we get paid out in September before awarding that to a lucky subscriber, which means the next payout is going to be £17.60 at the moment. We've now invested £1,000 into each of our 3 portfolios. It just goes to show a little bit adds up very quickly. And before you know it, you've got some decent savings. Those savings were helping us beat inflation. As of last week, the Battle Royale was up 5.4%, income generator 0.1%, although paying us dividends, and the benchmark up 1.8%. Okay, maybe not beating inflation, but on the right track. This week, however, very exciting continued growth. Let's start with the income generator, not so much, 1.9%. However, the benchmark 3% and the Battle Royale, we are outperforming our benchmark 6.1%. Beating inflation, so pleased with that. And our all-time totals, £2,975 of total value, 105 in returns. That is a 3.7%. A lot of us are sneezing at that, but slow and steady wins the race. And £70 in dividends. So going slowly, but I am very pleased with it.
3, 2, 1, fight.
If you're anything like me, cybersecurity is a very scary, incomprehensible subject. And it's not going away, that's for sure. as much as, or as recently as of just over a month ago, M&S and the Co-op were the subjects of the latest round of cybersecurity attacks, and it just always brings this subject close to mind. So the industry clearly needs companies to protect us, and the only question is, can we guess which are going to be, well, not guess, can we research and select the very best companies to ride the wave of this industry? Let's take a look.
First up, we have a really interesting company called Okta, and ironically, it's actually one I'm going to disregard, but it was a difficult one to disregard because it normally would tick a lot of the boxes I normally like to see. It's trading below the estimate of fair value, the earnings are forecast to grow very healthily, and for whatever it's worth, the analysts think that it's going to increase by 24.4%. In addition, I like its niche focus, which is, unlike other cybersecurity companies, it focuses on identity and access management. So how you access, how they verify who you are, things like two-factor authentication, that sort of thing. So quite a unique little insight. However, it's with very healthy growth rates, not quite as punchy as the other two on our list. So let's get straight to them. The first one we're going to take a look at is Zscaler. Now, this is a company that specializes in cloud native security for remote work environments. And of course, as the world gets more hybrid, hopefully, although there is a trend for coming back to the office, I don't think the hybrid world is going to disappear. And this could be a great growth area due to that. And in fact, earnings are forecast to grow at almost 50%. And if we have a look at that future growth, EPS of 44 and earnings growth rate of 47, that is tremendous. And so focusing on the battle royale, let's try and get some impressive growth. Its value, it's 0.5% undervalued, so pretty close to paying fair value according to this, of course. It does, of course, have a healthy balance sheet, although a 63% debt to equity ratio is not nothing, but not to be scared about for a growth company. And of course, being a growth company, there is no dividend. So very interesting, high growth, fair value, and relatively healthy company, good balance sheet. There has been some insider selling. So let's compare that to the next one you will have heard of, CrowdStrike. You probably know them from crashing the entire airline industry last year, and the stock price, you will be happy or unhappy to hear, has completely recovered, and apparently it's even now slightly overvalued, 5.6%. If you have a look at the valuation, it's also slightly difficult because they're looking at the price to sales ratio rather than a PE ratio. Which you sometimes associate with new companies. However, this has got a market cap of 128 billion, so it's a large company for sure, and that compares with just 50 billion for Zscaler, which is, of course, a bit bigger than even Okta at 17.4 billion. So, big company. However, the fact that it doesn't have a PE ratio, not too worrying, because we're buying it for growth and looking at that future growth even higher slightly than Zscaler at 52 and 48. Right, what does it do? Well, it's a leader in cloud-based endpoint security apparently it's got an AI-driven threat detection, which sounds pretty good, and everything's AI these days. It's got an emphasis on strong performance and enterprise adoption, apparently, so that's going to set it up well. No dividend, as well as you would be happy to see. It apparently does have a decent financial health, despite the fact that it's growing so fast, 21% debt to equity, and of course those big future earnings growth projections. So is it slightly more risky? I'm not sure. It's got the health, but perhaps not quite as much health to value as Zscaler. So not a huge amount in it today. Similar valuations, similar earnings for both, one slightly over the other. So do we want cybersecurity or hybrid focus? I mean, both are cybersecurity, sorry, but one's focusing on hybrids, which I quite like, and another is an industry leader with clearly strong business contacts. Otherwise, people wouldn't have come back. So those are the two. It's a tricky one this week.
So there we have it. Which one do you think we should invest in? Pop your vote in the comments, and of course we'll invest in the one with the most votes. However, I think we should be investing in Thank you so much for watching, everyone. I hope you have a fantastic week. I hope the markets continue on their upward trend, and we will see you same time, same place next week.
Goodbye.